investors?
That is a countervailing effect, but I think one of the reasons the Fed is deciding to pull back its quantitative easing through the taper process is because they believe that the strength in economic growth will counteract that. So absolutely, if interest rates go up, borrowing costs will increase, and often the weakest companies will find stress from that. But if the economy is improving enough, that will hopefully counteract that.
All right. But yeah, overall improvement in defaults. But in terms of the outlook, for commercial real estate, they're better off than consumer mortgages. And that leads you to think, is that a concern given the huge run-ups that we've seen in home prices and also demand for homes, this current state, the way that default risk is valued?
Real estate is tough to call always. You know, it's a long cycle asset. You know, you make the decisions, and then it's only a couple of years later before you have the building and you start collecting rents, or you start to sell the house or whatnot. So it is. There is certainly still uncertainty in that. There is still a lot of adjustments still being made post 2008 crisis. But I think the general consensus is much more positive.
But the short-term outlook for credit spreads, according to your survey, they're neutral. That's sort of rare. Why is that, especially given that we've seen an improvement in the global business outlook?
Well, the view of spreads versus defaults is very different. Now, we think of defaults as really the underlying mechanics, the underlying economics of credit quality and companies. Spreads are affected by many different things in addition to the fundamentals, liquidity, overall appetite for risk, which bounces up and down, you know, short-term fears and short-term events before they're fully absorbed into things. So I think what this is telling us is that longer term, you know, through the 12-month time frame, the fundamentals look much better than all the technical effects that can impact spreads in the near term. So things like liquidity and also things like central bank actions are definitely going to affect the near-term view.